Hey everybody, Jonathan Rose, owner, masters in trading. We're going to do a week in review. And we're going to do this, we're not doing this to boast, we're doing this just to go over the trades and to show you what could happen with a little long-term planning, some preparation, and some good old-fashioned education. So let's get going. Okay guys, so how Masters in Trading works is every single Sunday, I share the Sunday week ahead. That's in front of you. I send this out every single Sunday for options, and we send out the same thing for futures. And then every Monday we come to a live class where we talk about the options trade, make sure everybody understands the trades, and then we have an hour class for futures. Let's go over the trades that are on the spreadsheet. We're always going to give you the status, the symbol, the expiration, bullish or bearish, the original trade idea, which is the date added, but then every single Sunday, we add these updated levels because we get into a trade, for instance, PLTM, this trade was shared August 16th, but we need to give updated levels every single Sunday, so that's why we organize a spreadsheet like that. We always explain why do we like the trade. Technical analysis alone is never a good enough reason for why we like the trade. There needs to be some substance. Under status, we have open. That means we still like the trade. New is a brand new trade, and then closing only. So let's start going through these trades. The first one that we'll go through is PLTM. Now, we have this trade in futures, and we have this trade in options. Our view is platinum is going higher. Gold bullish, silver bullish, copper starts running higher. Next is platinum. You could do platinum futures, or you could do an ETF, PLTM. So here we have you at a chart at the ETF PLTM. Now this was shared August 16th, right around here. Now this was definitely not an easy trade. It went against us before it started rallying. This is one of those trades on the spreadsheet that certainly was not easy. Our high value target tool gave us a buy signal here, which was great, but overall we were bullish platinum, and so we were able to stick with the trade. If I take you back to the spreadsheet, the original trade was shared with these buy levels. Over time it was updated. Even when it was going against us, we stayed confident and we were buying 850, 830, 810. Now you may be thinking, well, of course, if you just fade or keep buying any trade that goes against you, it's going to work eventually. Well, not necessarily so. The way that we teach is figure out what you're comfortable risking and then get into the trade, but we're never going to lose more than we're comfortable risking. The next trade, 2, is PSTH. We found this using the unusual option activity tool, the wiretapper tool. The original trades that we shared was buying the 25 strike calls and the 22.5 puts. This trade's been okay. You can see this is my personal account. I'm long the 25 strike calls. I'm also long the 22.5 puts. You can see down here I'm long 10 puts. I was long 20 calls. I covered 5 calls yesterday, and that's why we're up a little bit of money. Overall in the trade, we're still up $650. We have 14 days left. Overall, this trade is starting to work. It's not great, but certainly better than a sharp stick in the eye. Our next trade, again, unusual option activity. We're getting into Oracle, the 58s and the 57.5s. You can see the stock's already at $60. We still have a lot of time. This trade's working out great. Next, we have POS. POS and Oracle, new trades this week. In January, bullish. Consider buying the 31 strike calls for $1.55 in Jan. Silvers have a nice run up this week. Last trade, POS, $30.84. And those 31s, beginning of the week, what were they, $1.50, $1.60? Right now, they're about $2.15 mid-market. Being long silver, a favorite trade of ours, specifically getting long silver volatility. So we have a silver trade in options. Also in our futures membership, we also share a silver trade getting long silver implied vol. Next up, we have LEU. So bullish uranium. I actually put out the last video I put out on YouTube maybe 5 days ago, 4 days ago, was about us being bullish uranium. We're bullish LEU, UUUU, it's called the 4 U's, CCJ, all three of those. I have LEU. I like LEU because at the time I got into it, at a $150 million market cap. Here's my position in LEU. I was long December. I got out of those. Now I'm just long 30 of the 15 strike calls in January with 42 days to go. Up $5,000 on this trade. LEU has been an awesome trade for my members. Look at Work, guys. Work shared November 15th. November 15th, Work, stay-at-home stock, was trading $26. Last trade, 42. Rumors of Salesforce buying them. So Work was just a massive winner. Spiders. Consider buying the 365 calls and the 361 calls in December. Now, we got in the SPY trade because of the VIX trading system. The VIX trading system gives us buy signals when there's spikes in vol, and then everything chills out. There's quite a bit more to go in the logic, or more to explain in the logic, but overall, going back to 2013, we only get 1 to 3 signals a year, but when we do get signals, our back tester has proven that going back to 2013, these signals are 100%. And every single time we've gotten a buy signal, we've gotten 100 points in the S&P futures. So that's why we got long spiders. Great trade. If you want to learn more about the VIX trading system, please go to mastersintrading.com. So as we go over all the trades, winner, 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 winner. Now if we go to long-term trades, we have KHC, Disney, and Twitter. Now these are long-term IRA trades. So let's first start at KHC, shared May 26th. So May 26th is right back here. KHC had a nice little run up. It pulled back. It's rallying again. This is working. Not working as well as some of our others, but nevertheless, it's certainly working. Disney, we've been long stock since $130. We're getting long Disney because they are moving to a recurring revenue model. Disney is slowly moving its assets over to a recurring revenue model. They're tying in Google+. They're going to tie in the theme parks eventually. Disney is going much higher, extremely bullish. And then finally, our favorite long-term hold is going to be Twitter. Twitter long from 30. Twitter ran up to 55. It pulled back a little bit. Still extremely, extremely bullish Twitter. Now, let me also add a few things because there are many people out there that are sharing different trade ideas, and you have to sit in these trading rooms all day, and the guru gets into a trade and then talks about all the money he makes, checks with everybody, and then everyone's like, oh shit, I missed the trade. Well, we share trades Sunday night. We share trades with some substance behind it. Most of our options trading is going to be using unusual option activity because we have a proprietary tool called the Wiretapper that helps us find these different trades. We share trades every Sunday, and every Monday join us for a live class where we explain each one of these trades. But a big congrats to all my members right now, because right now I think it's pretty safe to say, and not every trade is closed, but so far so good. I would say the spreadsheet right now is darn close to 100%. My name is Jonathan Rose. I'm the owner of Masters in Trading.